Ford, my battle Zord, is down 11.67%, and all the geniuses on YouTube are gonna be buying the dip. Why? Because if a stock dips, it must be cheap. Why has Ford declined? Well, a big reason is because their profits have dropped. And there's one reason why that's actually a little concerning. But before we do that, let me give you a little overview of what I think about when I see Ford stock. So if you look at historical trends, we notice that revenue over the past 5 years is up marginally, but is actually down on an inflation-adjusted basis. On an inflation-adjusted basis, Ford's revenues have declined. Let's look at the profit margins. Gross margin has started to trend downwards. Competition. Operating margin trending downwards. Profit margin barely profitable and trending downwards. And free cash flow margin trending downwards. Do you see the trend? Now, of course, past performance doesn't mean future performance, but it's a little concerning. It's almost like the auto industry is highly competitive, okay? And now that we have EVs thrown into the mix, it's even more competitive. Go look at China. They're clapping everybody's cheeks. That's why we're throwing up tariffs, because we're terrified of them and their electric clown cars. If we go look at cash flows, clear trend, operating cash flow is going down, etc., etc., etc. All the while, capital expenditures are going up. Isn't that funny? That necessarily means that free cash flows are going to constrict and constrict and constrict and constrict. Ford's like skirting the edge here, okay? I hope we don't have persistently high interest rates for much longer, because high rates, fewer cars are sold because cars are way more freaking expensive. I can tell you I ain't buying a freaking car at these interest rates. Now, let's go ahead and check out the most recent earnings. And as you can see, I was browsing a little bit. Ford reports second quarter revenue of $47.8 billion and net income of $1.8 billion and adjusted EBIT of $2.8 billion. Let me remind you, adjusted EBIT, anything that is non-GAAP, is generally hot freaking garbage and should be disregarded. Now, one thing I liked is that Ford Blue, because remember, Ford divides their business into Ford Pro, which is like sales to commercial entities like fleets, government, etc. Ford Blue, which is their main traditional cars that you think of. And then the Ford Model E, that's the freaking electric car, which is a disaster, oh, by the way. But Ford Blue, which is the vast majority of their revenues, hybrid sales are actually up 34%, which that's actually encouraging. Okay, electric vehicles are clown cars. They were, and they always will be. Hybrid seems to me like a more reasonable way to take things, especially when we have lots of oil we can still use. But maybe I'm crazy. And hybrids are now 9% of the company's global vehicle mix. That will probably increase. Okay? So if you look at more details, so we can see wholesale unit deliveries are up very slightly. 23,000 more deliveries in this quarter than the year prior. What is that as a percentage increase? It seems almost immaterial. A 2% increase in vehicle deliveries. Cash flows from operating activities, basically flat. Revenue up $2.9 billion. That's roughly a 6% increase. Net income and loss has dropped by $100 million. I wonder why. And margins have come down by about 0.4%. Why? Okay. Profitability was affected by an increase in warranty reserves, though efforts to lift the quality of new products are starting to pay off. What is a warranty reserve? Well, in accounting, when you sell a vehicle, you assume that a certain percentage of those vehicles are going to incur warranty expenses. There's going to be manufacturing defects. So what management and the accountants do is they estimate the percentage of vehicles that are going to have issues after you sell it to the customer, and they attempt to estimate the cost of those. Those estimates are expensed in the year that the sale is done. The reason they do that is to match the cost of the warranty expense to the revenue that is recorded when the vehicle is sold. So when you see an increase in warranty reserves, what they're saying is we recorded an expense because we think future warranty outflows are going to be incurred. There's some kind of manufacturing quality drop that is affecting the profits of Ford. And this is actually important because their profit margins are razor thin. So if they have a lot of defects, this could potentially lead the company to becoming unprofitable for a quarter or two, or even longer. You got to keep that in mind, okay? Now, if we go down look a little bit more about the different metrics, okay? Here's the funny thing. So Ford Blue, the traditional, part of the business, the, selling to dealerships, basically, all the lineups that you think, 741,000 wholesales were generated. 26,000 Model E's and 375,000 Ford Pros to commercial clients, etc., etc. It is hilarious to me how little they're selling of electric vehicles and how much this is hurting them. It is a freaking disaster. Why am I saying that? Well, the earnings before interest and taxes for the wholesales for Ford Blue, all the traditional vehicles being sold to dealerships, are $1.17 billion. Ford Model E lost $1.14 billion. 26,000 vehicles, and they lost $1.14 billion. And then, of course, they recorded fantastic profits. Basically, most of the profits came from Ford Pro. Okay, they got absolutely shellacked with the hit they took from their electric clown vehicles that are massively unprofitable. And they actually took a pretty big hit on Ford Blue, probably because of the warranty expenses. Year over year, the EBIT from Ford Blue is down $1.13 billion, $1.14 billion. That's probably because of the warranty reserves. They're expensing the warranty expenses in anticipation of having to pay them in the future. It's called the matching principle. Now, funny enough, sales, the revenue from the Ford Model E is down 37%. The entire electric car industry is a freaking disaster. Okay? It's a freaking disaster. It's garbage for clowns. This is ridiculous. So, of course, it's like, the capabilities we're developing in electric vehicles and software-enabled are wide competitive moats between Ford Pro and other companies. Blah, blah, blah. So, they're trying to talk up the electric cars. It's a freaking waste, okay? Focus on hybrids. Focus on your traditional lineup. Your core customer base buys trucks. Like, trucks are what makes a lot of profit from Ford. And, a redneck's not going to go buy an electric truck. They want gas. Okay, this is not hard. They should have put me in charge. So let's see. Ford's guidance for adjusted EBIT for the full year 2024 remains 10 to 12 billion, and expectations for adjusted free cash flow have been raised by 1 billion to 7.5 to 8.5 billion. So, funny enough, all right, if we go back and we look at the earnings per share of Ford, where do they have it at? EPS 0.46. So Tesla's EPS was barely higher, and they have much bigger declines in EPS, and yet the multiple for Ford versus Tesla is what? What's the multiple? What's the PE for Ford? 14. A 14 PE for Ford versus Tesla of 60. Price of sales of Tesla 7.23 versus Ford of 0.3. And they basically have almost the same margins. It doesn't make any sense, but that's besides the point. So, we see that Ford is concerning. I mean, I don't think the Ford's not dead. Obviously there's government interest involved in this. I know from being in the military, we buy vehicles. The government buys vehicles from American companies, and it's a pretty big part of their business. You can see it's roughly 30%, 20-30% of their revenues. Ford isn't going to go bankrupt, okay? But does it mean that the stock has bottomed out? No. I'd be a little concerned about these warranty expenses. Like, what's going on? Are they having a bunch of recalls? Is the quality dipping? Why is the quality dipping? Why are they still blowing all this money on the Ford Model E? Look at this, 26,000, and they lost 1.1 billion. As a matter of fact, let's see, 1.13000. Did I do that right? Divided by 26,000. They lost $43,961 per vehicle. What a freaking disaster. Okay. So I'm not a big fan of Ford. I mean, I'd rather buy Ford over Tesla, being perfectly honest, because Elon Musk is a scammer. But Ford ain't doing too hot right now. And, the long-term trends of the company are of margin contraction. So I'll leave you at that. If you enjoy my videos, consider hitting the like button and subscribing. If you would like a personalized video from me, send me $50. When you send me $50, email me and I will send you a personalized video. I can even upload it to my channel, discussing whatever topic you want. $50. I do not make stock price predictions. Consider buying my book, Stop Being a Broke Loser. It's on Amazon. And if you want a one-on-one tutoring session with me, I'm a certified public accountant, it's going to cost you $75 an hour. Once again, see the pinned comment below. Talk to you later.